Hey, good morning, everybody. Bob, Trade Genius. I want to show you something that I think should get your attention. We've been talking about negative rates for a while in Europe and so on and so forth. I think right now 3/4 of all debt is now being demonetized as a negative rate, and that's deflationary. And now Korea, which is a mercantilist economy, went into deflation. And why this is important, this is the canary in the coal mine, is that all countries that are export focused, Germany, Japan, Korea, China, etc., are in big and great risk of going into a depression, because the nations that are consuming these goods and services are not able to absorb anymore. And the United States is the number one. Part of it is political, part of it is demographic. People are getting older. Trump wants more internal trade. And number three is that people are pretty much tapped out. So the older people that have money aren't spending it because they don't need the stuff, and the younger people don't have the capital or the credit to be able to buy the stuff. And so what's going to happen here is you're going to start seeing a collapse of these economies: Japan, Korea, China, and in Europe, Germany for sure. So I think this is a warning, and I just want everybody to be aware of it. And what we need to start thinking about doing is to start positioning yourself for the short side on the indexes. And then obviously look what's happening here politically. The Democratic Party is absolutely gone batshit crazy in trying to win this next election, and their philosophy on economics will literally put us into a depression too. So people need to just start being a little bit more careful here. And I've been warning all through the last 18 months is to start taking money off the table. The stock market hasn't done anything since 2017. Okay, after the initial surge for Trump, it's been flat, and they've been just fighting a rearguard action to keep the economy and the stock market elevated. But they're not going to be able to continue to do that. So don't get leverage, but look at I'll show you a couple options here. Here's the market right now. Had a big overnight. It came back down here. We're pretty much essentially flat here. But when you start looking at options here to be short the market is for the S&P, you want to look at SH, and for the the small caps, you want to look at things like RWM, and be able to start positioning yourself to take advantage of what I think is probably a coming 30% minimum correction here in the next 3 to 6 months. And they may fight this thing all the way down, so you don't want to be leveraged, but you definitely want to be positioned. So raise cash, take some on the short side. We already had the big move here in the in the bonds. I mean, we're at 1.67 on the 10-year. This will fall as the Federal Reserve keeps lowering interest rates. And people smarter than I and more connected than I are convinced that they'll drive this rate to 0 too. And Trump wants it because we're at a relative disadvantage on trade, and people are basically buying our bonds and profiting from us. And he wants to take that and arbitrage that away. So you're going to see this is not going to be that great of an opportunity. In the past, people can hide out in bonds, but you're not going to get the same capital gains. If you're early enough, you will, but later in the game, you're not going to be able to make any money on that. So you got to look for derivatives such as short S&P, short the Nasdaq, and short the small caps. And where the metals and miners hang on this, it just depends on what kind of fear there is. So we just have to keep an open mind, and the goal here is is to make money. So we're just going to look for the opportunities to do so. But I just wanted to tell you that this is huge. Okay, this is huge, and not getting a whole lot of play, but they went negative. Exports are crashing, and it's not good news. And China's right behind them. Okay, China's done everything they possibly could to keep their economy afloat. They're tapped out. Japan's tapped out. Germany's going into a recession right now. So hang on to your hats. It's gonna start becoming a bumpy ride. I'll catch you guys later, and we'll see how the market reacts this week. Bye bye.